Hello, everyone. Today we're going to talk about Lesson 5, Financial Plan to Report using CSI. There are a variety of tools that provide financial planning capabilities and report capabilities that are bundled with CSI. There is General Ledger. All accounts payable and accounts receivable transactions are written to a distribution journal first, and then from the distribution journal, they are written to the general ledger. So the accounts receivable processes, customer orders, as we did in our quote to cash lesson 2, purchase orders, accounts payable, as we did in lesson 3. That also includes the job orders that we did in lesson 4. Again, all transactions are posted to a distribution journal. The distribution journal then posted to the general ledger. So before any transactions can be tracked, we have to have what's called a chart of accounts. The chart of accounts typically allows for those transactions, accounts payable and accounts receivable transactions, to be put into the right account. The accounts are typically sorted by product line, by department. There may be some new account requirements that will be outlined in the general ledger. Any accounts that need to be flagged as obsolete as you're migrating from the old system, from the legacy system to a new system, are also specified in the general ledger. And then, of course, you've got statistics and allocation accounts for business analytics and data analytics and business intelligence. Once the chart of accounts have been created, then there will be an account number, which you'll see here pretty soon when we do exercise 5.1. An account number for assets, for liabilities, for expenses. The accountants who are listening will appreciate all of the accounts, the various account types that need to be created in order to manage the revenue stream in CSI. Accounts receivable. From the moment an invoice is created, as we did in exercise 5.3, I believe, or 2.3, I believe, there is a payment. Once an invoice is made, the payment is received, it has to be applied. There needs to be an account to put that payment in. Invoice to cash starts with an invoice, sends the invoice to the customer, receive the payment from the customer, apply the payment to the invoice, and manage the cash. Notify the customer if there's a balance owed on there, if they buy a big ticket item and there's payments that they're making. If the payments are delinquent or late, then there's collections that need to be managed. There is the ability to reconcile bank statements and revenue streams. Once there is a billing date for our customer payments, for our invoice, then we will have the financial personnel will usually keep track of those orders that have been shipped, but the payment has not yet been received. If there's a billing process in place, that will always happen. Most of the time there will be a billing process in place. The invoice information can be included in an invoice report as we generated in lesson 2. Then there is an accounts receivable distribution journal. As I mentioned earlier, all payments, all accounts receivable must be written to a distribution journal, and from the distribution journal to the general ledger. Customer payments can be cash, check, credit card, electronic most of the time. If it's a B2C transaction, a business to consumer transaction, then there's probably going to be a credit card payment, a check, or a cash payment. If it's a B2B, business to business transaction, Then it's usually going to be from one account, from the vendor account to the business to the company account. Business to business transactions are usually electronic transactions. Bank statements then can be reconciled to make sure that the payments have been received, that they've been posted properly, and those types of things. And if you recall, in lesson 3, we did a purchase order to receipt and an invoice to payment for our accounts payable process. Accounts payable process, you can either generate an accounts payable transaction, as we did in lesson 3. You can manually create a voucher. Remember, the voucher is the way that, in CSI at least, the voucher is the method of making sure that we, the company, pays the vendor. And we created a voucher, if you will recall, in lesson 3. Okay, so financial reporting and closing, of course, there's month-end closing. You got to close the books at the end of the month. You also got to close the books at the end of the year, whether it's a calendar year or a fiscal year. There may be requirements for reporting our tax purposes and printing the financial statements and closing an accounting period. All of those things can be done in the financial reporting and planning to report exercises that we're talking about in lesson 5. You can organize your accounting periods, set them up, and open or close accounting periods using CSI. You can generate financial statements, month-end statements for all transactions that have been shipped during the month, any invoice that's been sent to customer, shipping, and posting of the invoice to recognize the revenue, to receive the revenue, manual invoices for orders that maybe the system was down and the invoice had to be generated manually. Those will have to then be transferred to the system. Post all open accounts receivable payments, run the reports, paid to date totals and things like that are part of what happens in CSI's financial plan to report set transactions. Okay, so in exercise 5.1, we're going to generate a financial statement, a balance sheet. You will see how easy it is with CSI to generate financial statements. Balance sheets, income statements, things like that are very easy to create, and that's what we'll do right now using CSI. So I'm going to switch over to Mingle, and I'm going to open CSI. These types of transactions, of course, would be done by somebody who has the role of accountant, if that makes sense. And the accountant is responsible for opening and closing the books at the end of the month, at the end of the fiscal or calendar year. So I'm on page 519, or 119 right now, exercise 5.1. Page 119, exercise 5.1. So we go to the form menu and we click open. This time we're going to open our financial statement output form. Financial statement output form. That's the form we're going to open. We click OK. And we wait for our financial statement output form to load. Now here's how simple it is. All you have to do is select from the drop. Notice there's no filtering required until you select the report. You can do a balance sheet, a budget, cash flow, income statement, multi-period income statement, quarterly income statement, work in process analysis reports. These are the common reports that are available in CSI. We'll do the balance sheet as it's called for in step 1, exercise 5.1. The account detail, which is should be checked by default. If it's not, go ahead and check it. The report type is main. Sometimes there's units. These are business units, or you can think of them as departments. It might be in some cases that you're running a balance sheet for a specific department or for a specific unit. So these are the 4 units. These units would have already been predefined. We'll just choose Maine for this assignment. We're going to use US dollars for our currency. If this were an international company, you have all different types of currencies available. And in most cases, CSI is, in fact, an international company, so the currency can be changed as appropriate. We're going to use today's date, which is the default. It should show that anyway. The group is the environment that you log into. If you remember, we log into CUNY DIM DALS, so we're using DALS as our test environment. That's the group we're using. Our summary level is a site level. You have summary, site, or direct reports. We'll go with site. The year start should be January 1st, 2016. Let's go back and change it according to the textbook. Actually, it should be 2017, I believe, because it's this was written last year. So let's try 2017. I didn't change it, but let's change it. January 2017. There we go. And so since we are still in October, I'm going to use 10. Now, if you decide to do this after tomorrow, after the 31st rather, then you would use period 11. Just whatever month you are in, whatever month we're in, that is our period. We have 12 periods. Let me just show you real quickly. You don't have to do this, but I just want to show you quickly. If we go to the Master Explorer and we go to Modules and we go to Finance, we can then go to General Ledger. And if we click Accounting Periods, here is where you can set your accounting period. And I'm going to change this to 2017. And then when you notice that you can change it based on the accounting periods. The default, I think this was set up with 2012. But anyway, we'll change it to 2017. You might want to, I don't think you have to do this in your system, but you can. And then if for each period, if we go with period 1, for example, it would show January. If we go with period 12, it would show December, and so on. And so then we can say we want to generate, well, I guess that's pretty much it. And then you can save that, your accounting periods. I don't think you'll have to do this. I just wanted to show you how to do it. And so we can go back to our financial statement. And we can simply make sure that we've got all the details as indicated in our exercise. Sort to remain at, the sort order remains at 0. We could change the sort order from first to last, last to first, things like that, depending upon how these sort orders have been defined. And then we click Preview, and it will generate a balance sheet for us. Takes a minute for the balance sheet to be generated. And this same process could be used to generate income statements, budgets, and things like that. So it shows the account number over here on the left. It shows our assets. It gives us the total for our total cash available. We have $4,980,000, $1,450.20, which is a nice number. Receivables, $449,258, and so on. It gives you the date, the time, all the various accounts and the balance for those accounts. It shows our total assets, other assets, current assets such as our facilities, equipment, and things of that nature. Those are considered assets. Fixed assets, oh, here they are: land, building, machinery, furniture, vehicles, and so on. Accounts payable, it'll show how much we are paying and how much. Let's see, there should be. Yeah. Long-term liabilities like facilities and building expenses. Total liabilities plus owner equity. So if you add the total owner equity here, which is $15,176,000, plus our total liabilities, those two numbers make a total of $15,955,719.67. So it's very, very simple to generate a balance sheet. So we will save this balance sheet and we will call it balance sheet and your last name. And then we will upload this to exercise 5.1 in Blackboard. Very simple, very, very simple process. Now, I'm not going to require you to do an income statement, which is exercise 5.2, but I will show you what it looks like. It's the exact same process. Only difference is instead of a balance sheet, we're choosing an income statement from our report ID list. We're going to use the same parameters, the same dates, the whole 9 yards. Everything is the same. And when I click preview, the reason I don't require you to generate this report is because there is a problem with the report. This is a test environment, and so the income statement is not showing any income, which is of course not correct. So I will show it to you here, but I do not require you to do exercise 5.2. Rather, you will simply submit the balance sheet and life will be good for you. And so you can see here that it's nicely formatted. It's got our sales and it's got all of these categories and account numbers, but it does not show any income. It shows all zeros. I think if you run it, you'll see all zeros too. I have generated a report, incident, so that they can maybe take a look and see if they can give me a quick and dirty solution for how to actually get the income statement to show income as it is supposed to. But for now, just know that you can generate an income statement. In the real world, it would show actual dollars and cents for these numbers and not zeros, of course. But this at least shows you how to run one. So good to go. And if you have any questions,